There you go.
Hello traders, Cousin Vinny coming to you from theclosingprint.com, June the 21st, 2020. In this edition of your weekend video newsletter, we'll discuss the indices, all of which moved higher last week. A little bit of a lower close on Friday, thanks to Apple announcing that they'll be closing some stores in select states, North Carolina, South Carolina, I believe, and Arizona, while other big box chains like IKEA announced they were opening stores in areas like California. Most of our indicators and oscillators are neutral going into this next month of trading. July typically is the seasonally strongest month of the year for technology. And with 7 trading days left in the month, we'll be looking at some good technology stocks that are set up properly above the 9 and 21 day as we look for seasonality to repeat. All of our big cap tech stocks that we follow, FANG included, were higher last week. The bond stock ratio is neutral. The Dow comp did pull back a little bit. It's below its 200-day moving average, and the S&P 1500 had one elder stick. It is bullish and moving higher above the 21-day moving average, with the ARC Institutional Index neutral and above the 21-day moving average. Tick and TickQ turned bearish short term, so we'll be watching for sentiment to change as we wait for open interest to tell us which way the markets are headed. The put call ratio is neutral. We did see VIX with a bounce last week. While commodities remain bullish, we're looking for gold to break out at some point, holding strength, consolidating recent gains over the last few weeks. Copper is bullish. It continues higher, consolidating above the 9 EMA. And West Texas crude, after taking a break for a week, extends its 9-week rally off of the lows with gains of over 510%. Its bullish trend continuing. The heat map is looking more neutral with more lime greens showing up. XBI, IBB are at 52-week highs. That sector looks like it's being bought heavily by institutions, so we want to check that out this week. We're also watching for international markets. Russia, UK, Mexico, Canada were more orange, therefore they're taking a break and consolidating. While Europe is neutral, it does look a little bit more bullish. The IBD 50, we'll look at some of these names, as well as the Market Smith Growth 250. The stocks in cyan are from the blue dot scan, and we also see the top volume percent gainers in green. All of those look pretty good, in addition to these 4 stocks from the Dow Industrials. The rest of the Dow Industrials were performing quite well. We're just watching for a bounce off the 21-day this week. Bukowski is still showing a caution signal. His indicators are giving us 3 of 5 red, with his CPI signal half red since June the 9th. Moving from 0% to 23%, that's still bearish. We need to get above 65%, I believe, to turn to a bullish signal. We have 29 bearish patterns, 9 bullish patterns, and 484 patterns waiting for breakout. So it's the last number that's improving and could lead to some follow-through this week. Bottom line, we're in day trade mode short term. We're waiting for institutions to tell us what they're going to do, waiting for open interest to start to increase. 3,000 is the support level on the S&P and SPY 300. VIX is the key. Just keep that in mind as we go into Monday and Tuesday trading. Starting off with the SPY 60-minute chart, we are right at support, right along that level that we saw on Friday at around 306, give or take. We did bounce off of that area, this very large volume by price level. We're watching for RSI to turn back up. So we'd like to see this range break to the upside. Obviously, if you're bullish, we have the 21-day as support. That did find buyers last week. We have a very large volume by price band support down below, just below 300. 3,000 is the largest open interest remaining in options. Going into July OPEX, RSI remains above 50 and MACD has drifted lower. We did have what appeared to be a distribution day on Friday. Any break of the 21-day would signal a move back to the 200-day at a minimum and then the 50-day just below. The 50-day is currently trading at 294.86, so it's possible that we could test the 200-day or the 50-day. Otherwise, we'll look for the 21-day and a move back above the 90 MA to forecast a potential test of the recent highs at 324. NASDAQ and growth stocks have performed the best. RSI continues to climb. We're just below all-time highs. Volume has been increasing over the week and MACD remains in control. So in the short term, at a minimum, we need to see weakness going into the last 7 trading days of June to turn MACD in such a way that we would look for a bearish cross. I don't see that at the present time, in addition to what we have already told you repeatedly, that seasonality over the past 5 years is the strongest for NASDAQ in the month of July. In addition, for this index to fail, if you're thinking bearish and looking for a pullback, you need to see these leading FANG stocks roll over. Even Apple, with negative news on Friday, it did manage to find buyers at the end of the day. For the NASDAQ to roll over, you need to see all of these stocks losing the 21-day moving average, the blue line. Google's the only one testing it, closed just below it on Friday. And if we check stocks like Microsoft, it is at the highs, and it did pull back on Friday, but it is above the 9 and 21-day moving average. So check your favorite stocks. If they're trading above the 9 and 21-day moving average, it's very likely that NASDAQ can continue higher. There's Quidel and Okta above its 21-day, while most of the IBD 50 in this case are above their 21-day as well. So look at all these stocks above the blue line. Many of these would have to start failing for any kind of pullback in the NASDAQ 100, with the caveat that many of them are trading near double tops and at 52-week highs. Building on the bullish thesis for growth stocks, we can see that IGX, IVX, the ratio between growth and value, continues to trend higher. That's telling you to focus on big cap tech. We'll also be looking for small cap stocks. If you're trading anything in the oil and gas group, small cap biotechs, or small cap technology stocks, you want to see IWM moving higher. We did pull back from the recent highs. We'd need to see a bounce, volume start to increase, and MACD remain above its signal line at a minimum, while we'd also like to see RSI above 50 and trending, making higher highs and higher lows, and stay above 50 over the next few weeks. Another thing for bears to consider is the advanced decline, high-low percent cumulative ratio of the S&P 1500 composite, S&P 500 big caps, 400 mid caps, and 600 small caps, still in a bullish cycle. We can see the green lines above the red line. Histogram is above the 2 level. That's a trigger zone. Looking for a follow-through. We did have one red elder stick last week on the S&P 1500. We're looking for a bounce at the 21-day and a move back to the upper Bollinger Bands, with any loss of the 21-day as a sell signal. That said, S&P 1500 breadth, we can see in the upper panel, S&P 500 mid caps, small caps dipping below the zero line, whereas NASDAQ continues to outperform. It's above the zero line and trading currently at 13%. So if NASDAQ turns back up, in addition to what we saw on the growth versus value metric and ratio, we would anticipate that growth can continue outperforming into the last 7 trading days of June. All things considered, however, we do have the one caveat that NYAD, the advanced decline percent, is in the red zone. We're making a series of lower highs. So we want to see this turn into a higher low and move back out of the red zone into the white zone going forward, and breadth improve to complete a bullish thesis. If we close again and start to produce a lower low in New York Stock Exchange advanced decline, that would be a sell signal as well. Looking at a broader measure of market participation, this is the New York Stock Exchange. New highs minus new lows, a very simple calculation. Adding a moving average to this is giving you a bullish signal as this continues to rise and stay above the zero line. This is telling you there's more new highs being made than new lows, net, while the NYSE is on a red elder stick just below the half-year 130 period moving average. We'd like to see VIX improve. It started with a bearish signal to end the week on Friday. VIX daily is showing a 50-day moving average which continues to drop. We did bounce back above it on Friday. So there is some increase in volatility. VIX is the key to this whole market. Again, if VIX starts dropping, dealers, institutions, and market makers will buy back their short as they see the volatility premium shrink, and they will buy futures. Whereas if VIX starts to spike and move higher, that would tell you that volatility is increasing and that institutions will be doing the opposite. They'll be selling futures and also selling inflated put premium. So if you're bullish, you want to see this drop this week. Taking VIX one step further, looking at the front month to the 3-month, this ratio between VIX VXV is in the neutral zone. If this were to start dropping, that would be bullish for equities. If it starts spiking and moving into the green zone, while it is longer term bullish, we would look for that to be short term bearish going into the last 2 weeks of June into July. So watch VIX VXV. Right now it's forecasting that the front month is more volatile than the 3-month, with short-term concerns being the overriding factor. Here is the Wilshire 5000, currently about 3,900 stocks on the weekly time frame. Continues this weekly cycle where we haven't hit overbought territory yet. We're looking for this subjective area overhead to start to flatten out or give us some sort of peak before we start to look for a pullback. As it is right now, we're creating a series of higher highs and higher lows, so we're looking for a push higher. RSI to remain above 50 and start moving higher into July and August. Whereas a failure and a move below 50 would give us a sell signal. We're currently more bullish than bearish on this particular index. If we look at breadth through the lens of the New York Stock Exchange McClellan Oscillator Summation Index, NYSI, we can see that we're making a series of higher lows. Back in 2009, when this index was dropping off markedly, we saw NYSE dropping as well, making a series of lower lows and lower highs. Whereas now we're making higher highs and higher lows in addition to a move above the plus 900 level, which is telling you underlying strength that people are not focused on continues in its persistence. So we're looking for this to continue moving higher than moving average going into the weeks ahead as breadth improves. The bond stock ratio is neutral, hovering above and below the 65 period moving average on this weekly time frame, the ratio between the 10-year and the S&P 500. In addition, junk bonds viewed as a risk-on, risk-off indicator, currently neutral, right below this very large volume by price band resistance. A move above this area would be bullish for equities. A move back down below this level would have support down below, but it would be short-term bearish for equities if that were to occur. Thanks to the Fed, individual corporate bonds LQD is moving higher. That made new 52-week and all-time highs as the Fed announced that they would be buying individual corporate bonds in the short term, giving this ETF a boost, a trend that will most likely persist, while commonly traded bonds like the 20-year TLT remain in a range over the last 14 weeks as we look for a trade going into the summer months. That said, the short end of the curve has been in a 14-week range, just moving sideways. This is the 1-3-year Treasury bond ETF continues to move sideways, while the 7 to 10-year Treasury bond ETF shows you the same information. Currency pairs, British pound, US dollar, back below the 21-day moving average, fading last week, which gives you a bullish signal for the London Stock Exchange and the FTSE above the 21-day. Look for a push higher if you're trading on the European side of the Atlantic. So with that weakness, you'd expect to see the dollar moving higher, headed towards the 200-day moving average, magenta colored line. As RSI was oversold over the last couple of weeks, we told you that we'd look for UUP and the US dollar traded ETFs to continue higher, as this trend is bullish, with the safety trade in the US dollar and gold continuing in the same direction. We're looking for gold to break out. If people start to flow into a safety mindset, look for gold to break above these levels and trade into the 1800s in the short term. We're above volume by price support, and RSI is tilted higher, with the monthly gold chart giving you a nice cup pattern. The right side building phase 2 as more buyers accumulate shares, with a counterbalance in copper, which continues moving higher. It did consolidate last week along this level. If we do break to the upside and continue this upward trend, that would be bullish for equities in the construction, builders, and building products groups. As we can see with the home builders ETF, continue that bullish trend. So watch for the 21-day and 90-day to hold this week if you're trading any home builder stocks, in addition to building and construction stocks. Finally, we have West Texas crude on the weekly time frame, up over 510% from the recent lows 9 weeks ago. We consolidated the previous week. Last week, we saw more bullish action. If we start to move above these pivots, look for crude to move higher. That would be a bullish tailwind for equities going into the summer driving season. Consulting the sector heat map, updated every Friday, read from left to right. We've gone from dark green to yellows, presently telling us to be more neutral minded, while the international indices looking a little better, some reds starting to show up in Russia and United Kingdom, in addition to Mexico, giving us a more neutral stance in the international markets as well, with a little bit more green in the European continent. In addition, looking at the consumer discretionary to consumer staples ratio, when this is rising like it was back in late 2018, early 2019, when the bullish market started, we're seeing the same sort of positioning by institutions. As long as this is rising, that's bullish for equities. As consumer discretionary outperforms consumer staples, the more safety-minded and defensive of the two sectors. Most sectors over the last 2 weeks have pulled back to the 21-day moving average, continue to hold, but we do see a series of lower highs. So we don't want to see a lower low, we want to see a bounce, a higher low in most of these going into the week, with XLU noticeably weakening and moving below its 50-day moving average, while the biotech sectors for both the S&P 500 and the NASDAQ continue to break higher. So we look for persistent strength to continue in the biotech sector as a potential trade going into the last 2 weeks of June into July. Here is the IBD 50 list. I would be remiss if I didn't repeat what I said earlier, that in order for the NASDAQ 100 to fall off or to become more bearish, you want to see these stocks in the growth group that outperform most of their peers to move below the blue line, the 21-day moving average at a minimum. Most of these stocks look pretty bullish. NVIDIA, Palomar, PayPal at the highs could pull in a little bit. Most of these do look pretty strong though. So if you're concerned about the markets, you need to see these stocks like Adobe breaking down. Adobe creates a creative suite of products like Photoshop, Illustrator, and other graphic related names that the advertising industry uses, indicating some strength in that sector as well as software. With Adobe continuing to move higher, I'd look for a little flag or continuation day as a potential day trade. This one has been doing very well over the last 12 weeks. Once it moved above the 21-day, this continues to test the 21-day each time, looking for a follow-through day as a potential entry. That's why I'm waiting for a little pullback. A pullback to the 90 MA that gets bought like it did here would be a potential entry, as volume shows that institutions have been picking up shares and the bulls remain in control as MACD remains above its signal line and RSI stays above 50. I do note that the semiconductor stocks have been moving sideways for the most part. AMD, Intel, all underperforming short term, keeping in mind that July is the seasonally strongest month of the year, so we might see something over the next 7 trading days into the month of July. Biotechs, pharmaceuticals, and related names in the healthcare and biotech group continue to outperform. Alexion was one we looked at 2 weeks ago. This bounced off the 21-day follow through. You can see how these pullbacks in a bullish trend, when they get bought, this is your highest probability setup when we move back above the 9 and 21 day. The closer you are to the 9 and 21 day when you buy, the better your swings. RSI suggests that there's more room to run. Volume increasing on Friday with a MACD cross. Most likely Alexion is going to test the highs and then break out this week if we can continue this momentum that's been persistent for the last 5 trading days. American Tower, one of the few REITs that performed last week exceptionally well, bouncing off the 9 and 21 day. You can see right here that this is a better entry if we start to follow through on Monday. A breakout is imminent. Would be trading in an area of no overhead supply where we haven't traded before, so there's literally no one up there to sell to you. RSI is above 50 and rising. Volume very conspicuous. MACD turning up as a function of price. We should see a follow through this week. This is related to 5G, of course. The company will most likely start to see additions to their cell towers as 5G rolls out across the country. Applied Materials worked well last week, still in a bullish trend, looking for a little pullback to the 9 EMA. We did take profits into strength Wednesday and Thursday. Some of you took it off Friday morning before we started to fade. Look for a fade back to the 9 EMA that gets bought as a potential entry. Notice the volume by price bands over here. A move higher would forecast a potential continuation in this trend with RSI above 50. Volume showing institutions have been picking up shares. Box and Dropbox both showing a continuation of the trend. We're very close to the 9 EMA on Thursday and Friday, so a buy in this zone wouldn't be bad for a swing. If we break above these levels, a stop below the 9 EMA or where we closed on Friday as a potential entry and a swing long, RSI suggests we could see more upside and a test of the recent highs. A move above this volume by price band would show that there's no overhead supply and we could see a follow through. Institutions making their presence known, MACD turning as a function of price. This looks pretty good going forward, as we'll also see in Dropbox in just a minute. BMY, Merck, Johnson & Johnson, Abbott Labs, and quite a few other pharmaceutical stocks saw buyers on Friday. Very obvious, institutions picking up shares, Bristol Myers bouncing a higher low, RSI moving off of the 30 zone, looking for a swing long with resistance at the moving averages overhead if you're thinking about it, and volume by price just overhead. On a move above 81.82, this should continue higher into the latter half of the year. Chegg, CHGG, purveyor of electronic and printed books for students of all grade levels and college, continues to see a breakout to the upside. Completely fooled me. I thought below the 21-day that this would continue lower and test the 50-day moving average. Instead, many of you in the trading room took this on Monday, follow through on Tuesday, and really started to accelerate Wednesday and Friday into an area of no overhead supply. This is a good example of when a stock is below the 21-day, it has to prove itself and stay above the 21-day. It did that in spades. MACD continues to trend. RSI is above 50. Volume increasing, showing institutions were picking up shares, and we got a MACD cross to boot. So the bulls are in control. If you're in Chegg, look for a follow through. The measured move being the depth of this channel on top of this breakout level, being about 10 points, so 77 seems to be in the cards in the short term. Or 20% on top of this, or 12 points using O'Neill's methodology as a potential area to start taking profits. Dexcom, many of you trading this last week with Robert, continues to move higher, looking for a break above this recent pivot high. RSI is above 50, telling you the bulls are in control, along with MACD above its signal line. Volumes start to increase. Look for a burst in volume. If institutions start picking up shares, it'll be very obvious. We'd be looking for RVOL to be above 2, 3, 4 to 1, if that were the case. Dollar General, we sold some Dollar General, and we bought some Target with some of those shares, as Target was outperforming last week. As we look for this retailer to outperform, holding above the 21-day, gets above this volume by price band, will most likely test the recent highs for Target. Volume showing institutions were also doing what we were doing by selling Dollar General and buying Target. Dropbox, like its competitor Box, continues to move higher above the 21-day moving average, RSI above 50, moving above this volume by price resistance zone. That becomes support. Look for a test of the recent highs. Volume increasing, showing institutions are picking up share, and we got a MACD cross to boot. Bulls are in control. Dynatrace showing up on the volume percent gainers. MarketSmith, you can see that above average volume. 4 of the last 5 trading days. Pocket pivots showing that institutions have been picking up shares. MACD crossing above its signal line. Look for another little pullback, perhaps, for a better entry. This looks like it's going to continue higher, trading in an area of no overhead supply, as we haven't traded up here, new 52-week highs. Facebook, showing relative strength last week, continues along its bullish 9 and 21-day moving average. Consolidating Tuesday, Wednesday, Thursday, moved a bit higher on Friday, gets above this volume by price band. There's a triple top up there. If we break out, a lot of prop desk will notice it. Volume increasing, showing institutions have been picking up shares. Look for Facebook to continue higher as the trend continues. Fortinet, security related, looking for a bounce off the 21-day. A bullish day on Monday would be a nice entry. RSI would turn up as a function of price. Volume already telling you that institutions have been picking up shares. MACD will change direction as well and start heading higher. Look for some bullish candles like we saw back here in late May for a heads up going into the summer months. If gold does break out, Franco-Nevada and Kirkland Lake Gold, both on the IBD 50, should continue higher, get above the 21-day and start to rally. Futu, FUTU, new on the IBD 50 this week. Another China-based company operating as a holding company that offers an online brokerage platform. These are a little bit more risky. Looking for RS line to continue higher. Sales and earnings continue to increase. A harbinger of better things to come. It's got decent numbers as well. IBD metrics. GMAB looking for a follow through. Looks like it's going to break out this week. RSI is above 50, rising, and volume showing the institutions have been active, and MACD is above its signal line and crossing. GoDaddy website hosting looking for a follow through. Picking up buyers again as it moves above the 21-day moving average. Volume showing very obvious buying. Institutions making themselves very obvious. MACD's turning, looking for a crossover this week. GSX broke out last week. Andrew left from Citron, was having a lot of negative things to say about the company. Looks like institutions played their hand and pushed this one higher. I wouldn't chase it up here, just making a remark that Andrew was short on this one or talking about potential fraud in the company. Kirkland Lake, another gold stock, needs to get above the 21-day and the 50-day moving average and follow through. That would happen if we saw gold break out of its recent consolidation. Netflix looking very bullish, looking for a breakout of this big range. If we get rejected at the highs, then what I would look for is a pullback to the 9 EMA. If we break out, hopefully it comes on volume. It looks like institutions have been picking up shares as MACD crosses as a function of price, looking very bullish going into the next few weeks. As it completes this next wave up, ATR3 bands being the next target at 473.06 and beyond. NVIDIA is trending along the 9 and 21-day moving average since breaking above the 9 and 21-day in the first couple of weeks of April. The trend persists. RSI is above 50. MACD is fading somewhat. Watching volume picking up. If we start to break out, look for NVIDIA to follow through and continue higher. Palomar, a few of you in the room trading this one. Nice bullish trend. Higher highs and higher lows. We've got our first bullish candle after that Thursday pullback. This should be good for a follow-through day if we see buyers step up early in the morning. Watch for relative volume as institutions start to make their presence known. With PayPal pulling back, this might show signs that these payment processors need to take a break, with most of them showing the same price action: Square and MasterCard and Visa. Pets, we've been watching this one, PETS, for a follow-through similar to Chewy, while Chewy remains the front runner in this group. Regeneron, BRTX, and many other stocks in this group, biotechs and pharmaceuticals outperforming, breaking out on huge volume on Friday. Look for these to continue. Some of you were trading Teradyne last week. That did break out as well. I tighten up my stops. RSI is near 70, looking for a little pullback to the 90 MA. The trend is intact, volume increasing, showing institutions have been picking up shares. Trade desk is trending, volume showing institutions are present, looking for a follow-through and trend to continue. Better entry would be a pullback to the 90 MA that gets bought like it did back here. First follow-through day would be my entry. Watching for relative volume and the stock to open above VWAP and continue the rest of the day for potential entry. TradeWeb consolidating along the 9 and 21 day. This is probably going to bounce this week. Volume showing institutions have been picking away at shares. MACD's turning as a function of price. Vertex Pharmaceutical, and another big cap biotech pharmaceutical name. Eager institutions picking up shares. MACD's crossing. This one's probably going to break out this week. VIRT in the financial group, looking for this to break above this volume by price band and test these recent highs. Volume showing institutions have been picking up shares. MACD's above its signal line, and RSI is above 50 and rising. Zoom appears to be consolidating at the highs, getting more and more risky. It's either going to break out or it's going to fade back to the 9 and 21 day moving average. Very bullish trend. And so apparently it's going to take some momentum from the bears to pull this one back down, as it shows signs of breaking out and continuing higher. Additional stocks showing relative strength are in the opening monologue. Make sure you check those out from the list. Stocks that look like they could follow through. Note Yeti and ZTO at the bottom. With all of these stocks showing relative strength or giving us reason to believe there would be some follow through. Market Smith Growth 250. Stocks in blue are the blue dot scan, and stocks in green are the above average volume candidates from last week. Bottom line, we're waiting for Monday, Tuesday to see how open interest starts to change for the month of July. So we'll know how to position going into the seasonally strongest month of the year for technology. Okay, traders, that's going to do it for me. This is Cousin Vinny coming to you from theclosingprint.com on June 21st. Happy Father's Day. I'll send out a watch list later tonight. Most likely going to be closer to midnight on the East Coast, 9 o'clock on the West Coast. So look for that in your inbox. Otherwise, take care. I hope this helps, and we'll talk to you soon.